Hi all, welcome to my YouTube channel Banking Regulation Simplified. In this channel, you will understand the latest trends of banking regulation, understand in-depth concepts of banking regulation, and also you can use this YouTube channel to catapult your career in the world of banking regulations. Good luck. Hi all, welcome to another video on our channel Banking Regulation Simplified. In today's video, we shall see about the relationship between BIS and BCBS. BIS stands for Bank for International Settlements, and BCBS stands for Basel Committee on Banking Supervision. In our earlier videos, we have seen that BIS is the apex body and the central bank for central banks and comes up with the banking regulations in the form of various Basel Accords, Basel 1, 2, 3, 4. And BCBS being one of the subcommittees under BIS uses the intelligence, the think tank, the network and the infrastructure of BIS and the intelligence of BIS to come up with this Basel Accords. So this is a very interesting synergy or relationship which drives the world of banking regulations. Now let's get into this video. So BIS, in other words, is the host institution. It's an international financial institution headquartered in Basel, Switzerland, considering neutrality, and it acts as the parent and host for several international regulatory bodies and committees. In basically, it provides the intelligence, administrative, hardware, software, the money power, the networking, the exposure to all the various committees and bodies which work under it. So out of that, there are various committees. There is a committee which takes care of which studies markets, financial markets. There is a committee which comes up with standards for payment infrastructure. Similarly, BCBS is a committee which comes up with standards for banking regulations. So BCBS is it's a key committee under BIS. We had seen in the earlier video in our 1974 there was a failure or a default of a German bank known as Herstatt Bank right in the middle of the trading hours due to losses which are incurred by losses incurred which are due to the movement of currencies. It had bet against the US dollar after the Bretton Woods scrapping of the Bretton Woods agreement, but on the contrary, US dollar appreciated, so it accumulated heavy losses which ultimately led to its failure. But the cancelling of operations and license was done right in the middle of the trading hours. So the trade which happened on either sides of Atlantic, one leg was completed where they had paid in Deutsche Mark, but the other leg was not completed because the license was cancelled right in the middle of the trading hours, which meant there was a loss of millions of dollars for customers. So this event created panic ripples across the banking industry, and many people woke up to the fact that banks are highly sophisticated and are highly interconnected, and especially there is very little sight of view or knowledge or control over the cross-border operations of banks. So this led to the formulation of the creation of the BCBS, which is an independent standard setting body. Initially, there were central banks and banking supervisors from 28 jurisdictions, but now we know that's expanded to around 63 banks, 63 central banks, which represents about 95% of the world GDP. So this is the division of roles. So BIS is the mother body, provides the platform. BCBS uses the intelligence and looks up to BCBS for its survival, sustenance, and excellence. So it comes up with the regular banking standards, Basel 1, 2, 3, 4. So BIS facilitates international cooperation by 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 virtue of its work and its existence over the nearly last 1 century. It was created in 1930s, so it's one of the world's oldest financial institution, and has immense trust and respect among the nations and the central banks across the world. So BCBS is a committee under BIS which is trusted and safe and entrusted with the responsibility of coming with banking regulation. And BIS publishes regular research reports, like I said, the annual report, the quarterly report, and the reports by their various committees are highly valued and followed in the banking fraternity. BCBS, on the other hand, just publishes the Basel Accords, which take care of niche concepts like capital adequacy, liquidity, leverage, and systemic buffers. So BIS is neutral, central bank owners. So in fact, the member central banks are the owners, and the profit of BIS is split across the members. BCBS is an expert or a niche technical group of supervisors and regulators who study the dynamics, the trend, the future of banking industry, come up with identify risks, assess risk, come up with suitable regulations so banks continue to be stable despite the evolution of their business model and the risk taking involved in their business model. So how they work together. So the economic think tank of BIS provides the research and technical support to BCBS, and when BCBS finalizes standards like Basel 3 or Basel 4, BIS helps through its sphere of influence and network, helps in dissemination, monitoring and analysis of those regulations, because regulations are more of a dialogue where they are proposed to their members, then members take some time to understand and come back for any feedback. It's more of a consultative dialogue which will go on for a few years before the regulations are formally announced. So BIS takes care of those dialogues between BCBS and central banks. So, in other words, BIS stands is for more about broad monetary and central banking cooperation. Its sphere of influence is much large. BCBS is more of a niche world, focusing mainly on specific banking regulation standards. A recent example, or in recent memory, is the financial crisis of 2008, where BIS provided the support for coordination between central banks. BCBS under BS closely studied, understood the fault lines, the cracks, the root cause of those issues, and what needs to be done from a long-term perspective, studied them and came up with the Basel III Accords, which had groundbreaking regulations like capital buffers, liquidity coverage ratio, many things which we will see in one of the future videos. So this is how the structure is. BIS has 5 committees under it. In our earlier video, we have seen the detailed organization structure, but for sticking to the agenda of this video, I've just drawn the organization structure. So there are 5 committees under it. CPMI takes care of the payment standards. Markets committee studies the markets and helps central banks to take decisions with respect to the with respect to the financial market operations and decisions. BCBS we already saw, it's about banking regulations. FSB is the arm and muscle under BIS. It's though it rolls up to under BIS, it's mostly independent and looks at implementing regulations through continuous dialogue and interactions with G7, G7 regulators and central bankers. And CGFS studies the financial markets closely, comes up with trends, regular reports, and also identifies risk, which is widely followed across the board. So this is about me. So towards the end of the video, I shall attach a small video of the slides, just in case if the slides were not clear in this video. I hope you like this video. For more such videos, like, share, subscribe. Thank you.